I was really delighted when I came to see the Young Leaders Program. And as I began to appreciate some of the work that you're doing and some of what the program entailed, it became pretty evident that some of the wisest insights and thoughts about the future of the economy won't come from me, but will come from people like Shane Oliver. Shane is probably one of Australia's best known, most distinguished economists. Currently serves as the Chief Economist and Head of Investment Strategy at AMP Capital. And has had a long journey in economics in AMP and out of Macquarie. Just to give a bit of context, I think this is part of a 5-part series. And so you'll have the opportunity over each of the different sessions that you'll have to explore different aspects of leadership. Today, we're going to delve a little bit into career choices, the economy in Australia over the last 3-4 decades, and then some of the kinds of questions that many of you have put forward about what do we think? How do we think about digital? How do we think about Asia? How do we think about the housing economy, which I know is on many people's minds? I'll find a way to begin to draw some of Shane's insight on that as we go along. So thank you so much for joining us. So look, I think maybe the place to start, and I know that there are, you've got a long history, Macquarie. Did your undergraduate here, did Master of Economics, did PhD, but perhaps getting into all of that, could you go back to, growing up in Sydney? Where did you grow up? Where did you go to school? And tell us a little bit about your kind of early upbringing here in Australia.
Well, oddly enough, I grew up in the area where I just drove from now. I've ended up back there. I grew up in Avalon Beach, Sydney's northern beaches. That was a nice place to grow up. It's very isolated. It's a bit like its own little bubble in many ways, and it certainly feels like its own little bubble through this coronavirus period. I went to a school called Barrenjoey High School, which if you ever go to Avalon, you'll see Barrenjoey is actually built in the Sandhills. So it was quite normal when I went to Barrenjoey High that, we'd have PE an hour once a week and we'd go for a marathon or a run, a jog, out the back gate over the Sandhills, down along the beach, then back in. And of course, by the time we got back to school, 2 or 3 of us had disappeared and gone for a surf for the day. It was idyllic. It was just fantastic. In winter, I did ice skating. There was an ice skating rink in Narrabeen. The other thing was when I was growing up there, I've never been particularly elitist. Barrenjoey started in 1968. The first year. I started there in 1973. So the people who started in Barrenjoey just finished in the year I was starting. Macquarie University, I think, also started in 1968, and I felt it was fresh and new. So when I got to the HSC, it was called the HSC back then, it was called Year 12, you had to fill out your university applications, submissions, whatever they are, and I actually ranked Macquarie ahead of all the others, even though people say, oh, well, you should go to Sydney or you should go to New South Wales. My careers advisor said I should enrol in law. I loved economics. So my high school teacher in economics, this guy called Mick O'Rourke, got me into economics. There was a textbook called Shade. I would go through that religiously. I think I wrote the whole textbook out several times. But anyway, I did well in economics in the HSC. But my careers advisor said, you're better off doing law at the same time. And I also enrolled in law, so I did law here as well, which was interesting because the law school in 1979, when I started at Macquarie, was very left-wing. Like half the faculty, I think, were communists or socialists or something, which was fine with me because I was into alternatives and that gave me a different view of things. But I wanted to come to Macquarie because I thought it was fresh and new and not old and stale. And that's certainly what I experienced.
So, Shane, I have this image of northern beaches, mid-1970s, off the surf, into Macquarie. Can you give us a little bit of a picture of what was happening in economics in Australia and perhaps in Asia in the 1970s? What was making it interesting for you coming out of school and heading into uni? What were the kinds of topics around the dinner table in economics?
Well, it was around the dinner table because my father did not have I think he left school to pick asparagus or something when he was 14 because he came from a family of 7 kids, born in 1929, I think he was. They were what they call the make-do generation. So he was very pragmatic, but my mother and my father believed in the value of education. So anyway, we'd have these debates around the dinner table. The post-war period was characterised by Keynesian economics, escape from the 1930s. We didn't want to repeat the 1930s, so therefore government played a bigger role in the economy. You saw that in protectionism in relation to the car industry. The exchange rate was fixed on a semi-regular basis, daily. I think they'd set a range for it, sort of thing. It was called managed. It wasn't quite fixed, but there were times where it had been fixed. But the big challenge in the 1970s was what they call stagflation. So slower, sluggish growth, low productivity, rising unemployment. It was sort of, today's number was 5.5% from the ABS. It wasn't that different to that, but it was rising. It was going the wrong way. And you had a much smaller portion of the workforce, of the population, actually in jobs, because female participation back then was very, very low. So it was very male-dominated, older industries. But the challenge was this relatively stagnant period of rising unemployment, but also very high inflation. So inflation started to get out of control through the 1960s. It got really out of control through the 1970s. At times it was double-digit. I thought I was doing really well in 1975, putting my money in United Permanent Building Society and getting 10% interest. Little did I realise I was actually going backwards because the rate of inflation was something like 12 or 13%. So people still get confused by that. They'd still say, that was paradise. Well, that was actually bad. You were going backwards. But in any case, that was the big challenge. And my father said to me, we thought it all had it all under control, and suddenly we don't know what's going on, because if we try and stimulate to deal with unemployment, we just get it with high inflation and everything just keeps going around in a cycle. And then there was the debate about the Phillips curve, and the Phillips curve becoming vertical, and inflationary expectations are out of control. So all those sort of things that you may study in economics, but were incredibly important back then. By the time 1980 came along, this guy called Paul Volcker was Federal Reserve Chairman in the US. And he decided this is all nonsensical. He's going to knock the economy into recession. They had a recession in 1980 in the US, then another one in 1982. We just had one big one around that time. And that squeezed inflation out of the system. So it was all about trying to get inflation down and ultimately get growth up. But that really didn't pay off until we went through the 80s into the 1990s.
So one final thing before moving into your time at Macquarie. So you had interesting economic context, interesting dinner table conversations. You mentioned your careers advisor and your teacher, Mick O'Rourke. Could you say something a bit about the teachers you had around you at that time? Ones at least that were interesting, and what made them good teachers? What were the kinds of things that maybe how they were engaging you, or how you engaged with them, and what the qualities of that education look like from?
Look, to be honest with you, I thought I got a good education at Barrenjoey High School. Does anyone know Barrenjoey or nearby? Yeah. So I thought I did pretty well, and I thought most of the there were a few teachers who were a bit off, but they weren't that motivated, sort of thing. But these teachers were motivated, and they would give you the time, and they would get you enthusiastic about it. That they would explain, this is the relevance of economics to your life. When you get out of here and go to university, sometime after that, you want to get a job. And, you need to understand the economy. So that got me really excited. Both Mick O'Rourke and this other guy called Mr. Tracy. He was my Year 12 economics teacher. And he also, they were very practical people. They would go through Shade, the economics textbook, and explain how that relates to today, even though Shade was reasonably up to date. So that's what got me interested in economics, because I could see that this stuff related to all the stuff that was around me. The only thing is, the only experience, I thought, well, what do economists do? I just go to university to study economics, but what will I do after that? The only people I could see who were actually economists were my economics teachers, and I didn't want to be a teacher. So it was a bit unclear as to where it would all lead. Maybe that's why I did law as well, but in the end it sort of panned out okay.
So you come onto campus, you start doing what I think would have been Bachelor of Arts back then, is that right?
That's right.
With economics. But I know you went on to do Master of Economics, PhD in economics. Can you tell us a little bit around how you found campus life, and what was pulling you to do further study as you started getting going?
Well, I kind of liked campus life. I liked the university hours, and so I was quite happy to keep extending this. I had enough money mowing lawns and doing people's gardens. So then it came time where I finished undergraduate economics, 300 level or Year 3 level, enough to get a Bachelor of Arts, and then I think you'd just put in brackets somewhere majoring in economics. And I didn't really want to do law. So I decided I'll forget about law. I've got 3 years of it. I'll do an honours year in economics. I did that. I came across, up until then, I was more left wing. I was in the ALP club. But then and I hadn't done much finance in my undergraduate years. But we had this meeting, those who wanted to do honours, meeting with potential supervisors. This guy, Johannes Jutner, Associate Professor Johannes Jutner, very precise guy, wore a bow tie, wrote numerous books, and very impressive. But anyway, he became my supervisor, and I found finance so interesting that took me down a finance path. Part of that, I was more interested in labour economics or industry economics, that sort of stuff. My supervisor, Johannes Jutner, said, you should do a Master of Economics honours program, which is by thesis. And then we settle on a topic, which is theory of speculation in asset markets. And once you settle on a topic, that's all very good, but usually takes forever to get going on this thing. But it turned out that through that time, it got more and more interesting because we had the 87 crash. Now, whichever way you explain the 87 crash, it's very hard to explain it as a rational reaction to information at the time. So therefore, you can argue, this is getting the topic of my PhD thesis, you can argue that markets are efficient if you study market efficiency. They're efficient in the sense that some news comes out, say jobs data today at 11:30, it's immediately priced in, but they're not always rationally efficient, and sometimes they can respond to that news, but it accumulates, they're not necessarily rational, so you can end up with some sort of bubble. So they may not be what Tobin, this economist, called, may not be fundamentally valuation-based efficient. And so that got really interesting and got me into writing this thesis. The reason I was able to finish it was because my love of economics, my supervisor was pedantic. He would say, if you start something, it's always, you should finish it. And there was one day, I told you the story, I was walking along the beach with my girlfriend, mid-80s, I think it was, and guess who comes running past? This German guy comes past, jogging along the beach in his funny way, didn't have his bow tie on, and says, Mr. Oliver, you must give me a call. And it was my supervisor, Johannes Jutner, trying to get me back to finish the PhD. So anyway, I did give him a call and we finished the PhD.
So this is probably a headspace that a lot of people in this room are thinking about, the kind of move from university into work. I know you joined at AMP 1984. Can you say a little bit about how that came about? How did you end up in AMP in 1984 and what it was like?
Well, in 1983, I was still here full time. Again, running for University Senate student representative. Anyway, that went nowhere. I think as a bit of advice, when you're young, it's best to start off on the left, because otherwise, if you start off on the right, you'll end up like Attila the Hun when you get older. So you start off on the left. I'm still a little bit there, but anyway, as you get older, you migrate into the centre. You get a house and you think, who cares about those millennials? I've got my house, I'm set, I just want my tax cuts, sort of thing. So you become very self-centred and financially based. Well, hopefully I haven't gone too far that way. But anyway, get to 1983. So as 1983 is willing, I'm trying to get motivated to do this Master of Economics, not getting very far, spending most of the year down the beach. For some reason, I've still had this slight bias against working for cliches. You do economics, you should go to the RBA, or you should go to Treasury. I didn't really want to do that. And this AMP guy seemed really nice. And that was when AMP was like, your family friend. It says on the side of the building, a sure friend in uncertain times. Just forget the headlines you've read recently. Just focus on the side of the building. But in any case, these people just said, Rectory is really nice. And they said, we'd love you to come in for an interview. So I had this interview with this guy called Mervyn Fiedler, another grandfatherly type person. And there was this little area there doing economics. Equal male and female, believe it or not. It was sexist back then, but that was quite progressive, I thought, anyway. And I thought, okay, well, I'll start at AMP. And this was January of 1984. There you go.
So early mentors when you came to AMP and helping you find your feet and learn the ropes?
Yeah, there was. The guy Mervyn Fiedler, particularly Kath Donahue was like an associate economist, helping me understand things practically. I mean, it was a bit weird then because we didn't have computers, we didn't have PC. I think there was one in the area that you could share. But Mervyn Fiedler, Kath Donahue, it's got another guy called Rob Escort, who was very much a market-driven person. So AMP went through many of its regular restructurings, and our economics team became a lot more focused around asset allocation decisions for multi-asset funds. So if you look at your superannuation, and if you have a job, it's going to default superannuation or choice that you've made. Invariably, it's going into some sort of multi-asset fund run by somebody, it might be Uni Super, for example. And we would work on the asset allocation for those funds. So that's the mix between equities, bonds, Australian assets, global assets, currency hedging decisions. Should we be exposed to foreign currency or hedge it back to Australian dollars, property, and so on. And so that's where I've spent most of my career, focused on asset allocation decisions, which... so there's Rob Escort guy, and there's another one called Andrew Threadgold, who was the head of AMP Capital many years ago. Great mentor, I think, in helping me move from just being a regular researchy economist to being a chief economist. And one of the things he said to me is, when you're dealing with the media, don't worry too much about what you say. If people worry about it too much, then you won't say anything. You just get nervous and trip over your words. And you also reckon that they often don't remember things. What was yesterday's story is forgotten about tomorrow. But they were the main ones. There's another guy called Lee Hole, but there's been a lot of mentors through that period that I think have inspired me in terms of economics. And the big one would be Robert Shiller. At the time I was doing my PhD, Robert Shiller, a US economist, was doing a lot of work on bubbles. And I would sort of look at what he does and think, well, I can apply that to Australia. And of course, you have to refer the approach to him, various bounds tests and what have you. But that really inspired me and helped me get my PhD done because of the work he and people like Summers and others were actually doing in relation to bubbles in the US.
I want to take you to the 87 share market crash. One of the things I've always enjoyed in your writing, Shane, is you're very level-headed during periods of great volatility. And I'm just interested in how you experienced 87, what it felt like, what role you were doing at that time, and what that was like.
Yeah, I think by 87 I was called a senior economist, which is just one step up from economist. But anyway, I remember the day. It was quite a fearful time because the US share market had obviously fallen quite aggressively. We had one computer, still sharing one computer, and I think it had a Reuters terminal on it, so you could sort of see what was happening. So it was a horrific fall, and I thought, God, this must be the end of the world. The share market over the space of 2 months in Australia fell 50%, in the US it fell something like 35%. But it was the big one-day fall that shocked everybody. I remember a friend of mine who was this older guy, actually a guy I'd met down the beach once, and he used to be on Australian TV. He used to be a reporter on A Current Affair. And I got talking to him. But anyway, he phoned me up and says, what should he do? Because he'd retired, and it turned out he'd put a lot of his money into a company called Westmex. Like at this point in time, there was a lot of, they were called entrepreneurs, Alan Bond and others, who had really specky type stocks, high risk, highly geared stocks. And the 87 crash turned many of them to custard. And if it wasn't that, it was the recession in the early 90s. But he had a lot of his money in Westmex and lost a small fortune, and that made his retirement a lot tougher. So it was quite a painful time, obviously, for me in employment, but also, uncertainty about what it means, but also for people who'd lost their money here. Now, in terms of employment, it had hardly any impact because the share market had done that. Like this is January 87, it went up there and came back there, so whoopee-doopie, it was back where it was at the start of the year. And so I felt, fortunately, I didn't have choice in my super and didn't do anything stupid. The stupid thing to do would have say, the market's come down, it's going to keep falling, I better sell. And if I'd done that, I know I wouldn't have got back in for another year, by which time the market's well above. And it also highlighted to me the power of diversification, that you've got to have a well-diversified portfolio. Don't just rely on one stock that then goes bust. So it had a big impact. It had a big impact on me in terms of my PhD. It provided the inspiration to get that finished, because I could see this was obviously some sort of bubbly event up here, and now it's back down here. But nothing much changed. There was no recession. The economic environment just continued as before. You could hardly notice it in terms of the economy. So it was a classic example where markets dislocated from the economy.
So you became chief economist at AMP then in 1994.
Yeah.
And I wondered if you could say a little bit, I mean, you touched on it briefly, but just say a little bit about the kind of economic landscape in Australia through the 90s then, coming into chief economist, and what were kind of the issues that you were dealing with, the kind of clients you're advising, and
Well, that was a good time. The 80s, that we had the problem with stagflation. By the 80s, we'd had Paul Volcker in the US. He got inflation under control. Reagan came along with the supply side revolution. I hated Ronald Reagan, his politics, but by the same token, the things he did helped reinvigorate the US economy, because he got the supply side working again. And that was all sorts of things like deregulation and privatisation and so on. So it freed up the ability of the economy to respond to stronger demand, and therefore boosted productivity. Thatcher in the UK actually got elected just before Reagan. And in Australia, we had Hawke and Keating, who had very similar policies. And that sort of took Australia out of being a little sleepy place, as Paul Keating would say, with the Astor TV in the corner and the FJ Holden out the front, to a more modern economy, I think. And Hawke and Keating became my heroes. In fact, in the 1993 election, I handed out how to vote cards for Paul Keating. So by the time I became chief economist in 1994, a lot of those problems had been somewhat resolved. We got inflation under control. We had a severe recession in the early 1990s. But one of the things, which is still a bit of a residual issue in Australia, is that we hadn't fully, I said we got inflation under control, I'm thinking of the US, we hadn't fully got it under control in Australia through the 80s. It was still kept perking up, whereas the concept of inflation targeting started in New Zealand a few years before, but in Australia it started in 1993. And Bernie Fraser was the central bank governor, and it was 2 to 3%. Guess what? It's still 2 to 3%. And that helped anchor inflation expectations. But because of all the economic reforms we had in the 80s and the early 90s, it led to a really good period in the Australian economy. Pretty solid economic growth, full downtrend in unemployment, inflation stuck between 2 or 3%, which was sort of like an idyllic time. There were problems, and then as we went through the late 90s into the 2000s, housing affordability became, I think, more of an issue. But the old issues of inflation and unemployment started to fade as concerns.
I want to come into housing affordability actually and some of those issues, but maybe just to take the opportunity then, because you've stayed in the chief economist role then throughout that period, which is a pretty, I mean, I'm interested in how's the role changed during that period, or at least how's the approach that you've adopted to it changed? And maybe you could use that as a way to say something a bit about the sort of 2000s and,
Yeah. Well, you could probably say, I mean, I'm probably fairly stable. I'm still living in Avalon. I did live in Manly for a little while, so I lived in Avalon, Manly, and Avalon. Beaches. I've been everywhere if you take that old song. But anyway, and then I come to Macquarie University, do everything at Macquarie, then go to AMP, and I'm still at AMP. And things evolved along. The Andrew Threadgold, who was a CEO of AMP Capital, said, the fact that I had a PhD helped me get the job as chief economist. So that was quite useful. It did change a little bit in 2001 because I took on another role, head of investment strategy, which was formalising the focus on asset allocation for our balanced funds and specifically one particular fund. Why have I stayed there so long? I mean, partly I felt a loyalty to AMP, that they'd done the right thing by me, given me that time off to study at Macquarie to get the PhD. I felt that they were a sure friend in uncertain times for most of their customers. Obviously, some problems were highlighted at the Royal Commission, which oddly enough still haven't, I don't know where that's sitting at the moment with ASIC and what have you. That was quite a devastating period. But up until 2018, I felt AMP had a noble purpose on the side of the building. Amicus certis, a sure friend in uncertain times, like Macquarie and gladly teach, that's a noble purpose. So all that has to happen now is got to reconnect to that. But given the issues of recent years, but it was a place I was proud to work at. And then I had a job which I loved, economics, applying economics to investment decisions. And it was a multifaceted job because I could sit there at my desk and do work. No, I could sit at home and do work, so it's very flexible. But I can also go out and talk to the media. I can talk to customers and connect with the people who are investing in our funds. So there was a lot I loved about that job, which kept me doing it, which is why I've been chief economist since 1984, and I've been at AMP almost 37 years.
Amazing. So I think at this point I might pull in some of the questions that some of the students have pulled in together, and I've broken them up into bits and themes, and I might have a go at aggregating some of the questions into the themes. So the first one is probably just building on this housing affordability issue and thinking about this. I suppose people might be looking for investment advice in the audience, but more broadly thinking about the tensions as well around housing affordability. As people have asked some questions around, are we going to see large areas of homelessness because of housing affordability? How might we think about house prices and regional growth and, the city metro versus the kind of regional dynamics? Maybe just something that you might share about how the housing economy and the politics around housing and economics in Australia is changing, has changed, where it's sort of heading in your view. Yeah.
Like that to me is a major problem. And I think it's a major inequity that me, a baby boomer, and maybe the generation below, Generation X, have done very well out of housing as it's boomed since the mid-90s. So I didn't worry about it too much up until the mid-90s because it just had this cycle up and down, housing affordability, some function of interest rates, household income, and house prices just had this sort of cycle. HIA, the Housing Industry Association, had a housing affordability index, which just cycled up and down. And then from about 1995 onwards, when I bought my house that I now live in, it sort of all just went ballistic. And I was, when I bought that house, I was 34, and my wife were working. We couldn't really afford it, but it was conceivable that someone like us could easily afford a house in Avalon, and we were just living in a unit. So it was negatively geared for the first few years, and we were able to pay the mortgage down to the point we could move in, start a family and so on. But now I think that it's just got so difficult to do that. When I hear people who have bought into the area, colleagues younger than me, they've got mortgages of about $1.8 million. Mine was $350,000 or something. And for most of that time, I had strong wages growth. So the burden goes down when you've got strong wages growth, whereas now wages growth is very low. And so you're with that burden for a long time. So I can say technically, well, your interest rates are lower, therefore you can afford to borrow more. But the reality is that you will end up with that mortgage for a lot longer. And I just think that's a bit unfair that the great Australian dream, which I think is a very positive thing, that everyone can afford a quarter-acre block, is sort of slipping out of reach for many until they reach 65 and their parents die and they inherit the family home, by which time it's too late anyway. You get it at 65. That to me sounds like a problem. And these sort of problems have been brewing to some degree, and they partly resulted in Donald Trump in the US, social injustice or inequality or whatever you want to call it, led to Donald Trump. He tapped into that. I don't think he solved it, maybe made it worse. But if you don't deal with these things, you will end up with social problems. Now, there is a little bit of light at the end of the tunnel because the coronavirus pandemic showed that we don't all have to live close to our office in the city. We can live more broadly. And so therefore, and also it's led to a stop in immigration. Not that I've got anything against immigration. I love immigrants. My wife is an immigrant. My mother came from New Zealand, so I've got nothing wrong with immigration. But the trouble is we ramped up immigration levels, but we didn't ramp up the supply of housing. And then we jammed everyone into the cities. Now, the pandemic has shown a way out of this because you don't all need to work close to your office. A lot of people don't need to come into the office at all. So that opens up regional Australia for greater growth. And the pandemic freeze in immigration levels provides an opportunity for a bit of a reset, breathing space to build more property, which is what we're doing. And then eventually immigrants come back and then hopefully housing is more affordable. The other thing that has changed, of course, is I reckon interest rates are getting close to the bottom. You could say that mathematically because the cash rate is 0.1%. The RBA says we don't want to go below that, or it's extraordinarily unlikely. But if you don't keep getting interest rates going lower and lower, it's quite probable you can't keep having this repricing of house prices ever higher because your interest rates have hit bottom. So some of the things that drove this horrible deterioration of affordability may be coming to an end. And that may provide more affordable housing down the track. But I suspect that it still requires more government intervention to make it easier for people to relocate to regional centres, make sure there's enough supply of housing out there. There should be. I don't know why there wouldn't be, but that's something you need to look at to ensure appropriate development rules that don't bog things down, to actually encourage people to move out of the cities. And probably also, I sort of agree with Labor on this front, you probably do need more social housing. It was a common thing in the post-war era to have housing commission homes, and then they went out of fashion. I think there is a bit of light at the end of the tunnel. It's just that government probably needs to push us more down that path.
Any comments just extending on that in relation to the recent budget and your views on where, proposed fiscal policy is heading, or kind of interventions and changes in financing?
Yeah, the budget came out a week ago. I mean, it's as an economist in Australia, the budget is sort of every once a year. It's like a ritual. You sit around and watch the budget. I used to do it from work. I had this other ritual where I'm not a big fan of McDonald's, but I like a Big Mac and a hot apple pie and the orange juice. So I would, on budget night, because I never have McDonald's anymore, but except on budget night, I would at 6 or 7 o'clock, I'd go across to the McDonald's near our building and have Big Mac, hot apple pie and orange juice. But so budgets are a ritual. I've been staying back and looking at them in detail and staying up half the night since 1988. I don't know what happened before then. We didn't look at them. But this budget surprised me. I mean, I think what the government's done here is great. JobSeeker is one of the best support programs the government could come up with through. They got a bit of warning there through a shock. And you can see it today. Employment in Australia is 0.3% above where it was prior to the pandemic. In the US, it's 5.3% below. So that's millions of people in the US. Lots of jobs that were there before are not there now. All sorts of factors behind all of that, I admit, but we're one of the few countries that has employment higher than it was prior to the pandemic. JobKeeper was a big factor in that, and other programs. So I think the government did the right thing. The debate now is whether they're still pumping more stimulus in. A lot of those things I think were justified more on aged care, funding of NDIS and some other things. But there is a danger that they bake too much spending in and then you can't wind it back and we end up with budget deficits forever, ever rising public debt. And therefore at some point there may be a crunch point where you've got to cut it back down again. There's a question mark as to how you do that. But for now, I'd give them full marks. I gave the budget 9 out of 10 for macro management. In the budget, there was stuff on housing. So if you want to get into housing with a deposit as low as 5%, you can do that if you're a first-home buyer. And there's different programs. There's 2 of them, 2 tranches of 10,000 each, and there's another one called family housing, which is 2.5% deposit. The problem with that is if you're paying 700,000 or what are you paying Sydney, 1 million more for a property, and your deposit is just 5%, you've got to realise you're going to have a massive amount of debt. And question mark is that sustainable? I don't know. But it reflects the tendency in Australia to try and solve the housing problem by throwing more money at demand or more support for people to pay more for housing, which ultimately benefits me. I'm thinking selfishly here, but I don't want to benefit because I'm already well off enough. But it benefits me because all those younger people got more money to buy a house, a first home buyer grant. You can borrow with a smaller deposit so they can pay more for a house, but it benefits those who are already in the property market. So that's why I'm not a fan of those measures. I prefer measures that boost supply. And therefore, you have to give Anthony Albanese a tick with the 10,000 social, was it 10 billion, I think, for social housing. I think that's probably the sort of thing that might help here.
So second theme, and I might pull these together, is one on industry policy and one sort of within the region, but comment here around Australian manufacturing and what might we think about in terms of strategic weaknesses in logistics and production, but also this broader question around Australia's role in Asia. And I know a number of our students here have families in India and Bangladesh and others. And I just wondered if you could say something about Australia's global competitiveness and where and how you see that competitiveness playing out over time.
Well, the competitiveness is partly a function of the exchange rate. So at times when the Aussie dollar goes up because of high commodity prices, like it got above $1, got above parity in 2011, it can be really bad for competitiveness. So the maker of my recent favourite car, Holden, they went kaput. They were efficient. They were profitable if the Aussie dollar was 85 cents or below, but when it got to parity and no hope of coming down, they weren't. If they'd been able to hold on, it probably would have been okay, but they were encouraged to go by the government, so they've gone. So that's always a challenge for Australian manufacturers, that they're beholden to the commodity price cycle. So they have to be ultra efficient to survive. And there are companies that can do that. If you go to the Gold Coast, you'll see people that build huge cruises, Riviera, Maritimo. You might think you can never afford one. I reckon in the next 40 years, there'll be a few in here who will have one. But they do cost quite a lot of money. But these things are highly valued, sold all over the world, very highly regarded boats. If I look at them, I sort of think if I wanted a boat, Riviera would be what I would want to get. Just they're a bit more expensive than I can afford. I just had 3 days in Southwest Rocks, and you walk through the caravan park there, and guess where most of the caravans are made? They're made in Australia. So we do make some good things really well, but it's a real challenge, I think. And the other challenge is that we don't invest enough in R&D, and some of the measures of that have Australia being down the bottom. So I think that's lacking in Australia. It partly reflects a lack of government support, partly reflects that industry, many companies are subsidiaries of foreign companies and they do their research back home somewhere else. So that's an ongoing challenge. In terms of Australia's trading relationship, our biggest export market or trading partner used to be the UK, then I think it was the US, then it was Japan, now it's China. You can guarantee this will change regardless of the tensions between Australia and China. And India's been coming up from below, and I suspect that in years ahead, it will ultimately end up being India. But it'll be a slightly different one again, and it will take a while to get to that point. I do worry about the tensions between Australia and China. I have a lot of friends in China. AMP has a joint venture with China Life. At the moment, you sort of wonder, well, how come Australia hasn't been hit economically by it? Well, bottom line is that the biggest export we send to China is iron ore. We produce something like 50% of all the iron ore that's exported globally. And the rest of the world would only cover 80% of Chinese imports. So China says we won't buy any more iron ore imports from Australia. Even if it took all the iron ore production in the rest of the world and shipped it to China, it would only cover 80% of their needs. So there's a bit of a constraint in doing that. But because the iron ore price has gone, it's not $55, it's $200 or something, and our iron ore exports are booming, that's offset the negative impact from these other products like wine and lobster and I think coal and copper and so on.
So maybe extending on that a little bit, clearly from some of these questions, a number of people in this room are involved in small business. Maybe it's through their families and so forth, but there are a range of different questions and thinking a bit about how small business competes and develops strategies in relation to some of these broader macro challenges. And I think some of those are related to how to deal with some of the uncertainty, maybe some of the elements of the commodity cycle that, are beyond its control, maybe also digital, presenting various different opportunities to compete in new ways. I don't know if from a small business perspective, or if you're a family business, how would you position yourself, or how would you think about, how to deal with these macro factors and geopolitical factors in terms of strategy?
That's a good question. I mean, the first thing to do is find a little niche, where something is not being, where there's where you have a bit of expertise and there's a bit of a gap there. I think the reality is we live in one of the best regions in the world because neighbours, when I came to university, we were focused more on Indonesia, Malaysia, Singapore, Thailand, Japan, but China was sort of off the horizon sort of thing. Now we seem to have become more focused, oddly enough, on China, and no one learns Indonesian anymore at school. I mean, when I went to school, you could learn Indonesian. So it seems as if we've sort of lost touch with our nearer neighbours and other parts of Asia to some degree. So what I would do is try and find something where you have some experience or product offering or idea which is not being met in the market. If possible, try and target countries nearby.
And then final question, and maybe this brings back into the investment world, and then I'll go to some personal things, but there was obviously another and final theme around environmental social issues and the factor of ESG considerations in thinking about that. I wondered if you could maybe give a little bit of a potted history and potentially perspective on the relevance of the ESG considerations in the investment world. And
well, I think it's very important. In 2001, AMP was one of the first fund managers, along with BT and I forget the other, to launch socially responsible investing funds in Australia. And that was at the time we had a relationship with Henderson in the UK. But anyway, we kept that going. So 2001, we were one of the first. ESG back then was called ethical or SRI, socially responsible investing. But the main elements were environmental, social, which is community around you and your staff and governance. And we had a lot of success on that front. And I think that stuff's incredibly important. All the evidence suggests to me that companies that don't pay attention to ESG are at risk. Milton Friedman once said that the responsibility of the company or the shareholder or the managers of a company is just to the shareholders. But I think it's often put to extremes, that view, because if you don't look after your employees, your customers, the environment around you, and have good governance, then you will ultimately, the risk is it will not serve your shareholders well. So to serve your shareholders well, you have to have good ESG. And I think the experience that AMP's had, both with the Royal Commission and recent decisions, highlight, I think, the absolute importance of ESG. You have to view decisions you're taking, whether it's a business level to keep some fees going, fee for no service, if you want to go back to that one, or the decisions last year, you have to look at things through a ESG framework. I think that's critically important. So that's where I would see those things. It's not to say that culture is more important than shareholder returns, but to get good shareholder returns on a sustained basis, you have to have good culture, you have to have good ESG framework. So it's not a factor of saying, if you invested in an SRI fund or an ethical fund, you will get low returns over time because you're not investing in dirty stuff like tobacco or uranium mines or whatever, or coal. It's more a factor of saying, invest in cleaner stuff, better governed stuff, you will actually get better returns over time.
So final two little questions for you, more of a personal nature, and then I'll see if there's anything from the floor we want to pick up. So one is, in your day job, you're dealing with uncertainty all the time, in terms of how to consider volatility. And I wondered if you could reflect on how you might translate that into personal decisions, career decisions. What metaphor or extrapolation about how you approach uncertainty in financial markets could you play into how you might think about the job market or career market or personal decisions in various ways?
Yeah, that's a good one. I mean, one of the things I learned from the 87 crash was that stuff happens and you don't want to get too carried away with it. And you've got to put things in context. So when you go through your life, there'll be various uncertainties. Like when I was at university in 1983, going to the beach all most of the year, thinking, what the hell, what am I doing here? I'm not doing anything useful. How do I get a job? And then you start worrying about that, but you just got to put it in context, because this will be an issue right through your life, that you'll have various uncertainties. And if you worry about them too much, you'll have a less favourable life. You'll be constantly worrying about these things. So one of the things I like to do is try and put things in context. What's the worst that can happen here? What does history tell me about these things? Odds are you'll all get jobs. Things will pan out. You have to work towards that, but don't fret about it too much. I always think you've got to fret about it enough to get yourself motivated, but not so much that you become debilitated by it, and to the extent that it takes over your life.
Final question for you, Shane. You started with a picture of Australia, Avalon Beach in the 1970s, and you came to Macquarie because it was fresh. You went to AMP because it was fresh and different. How do you keep fresh now? What are the things that you do to keep your thinking sharp? And
that's a good thing, because as you get older, you get locked into ways of not being fresh.
Books, conversations, people, activities?
Well, one of the things with the pandemic is that I've connected with a lot of different people from different professions. And that was partly, I didn't really know our neighbours that much. And then you suddenly find they're all into all sorts of things, company directors and scientists. And I do a lot of reading. I'm currently reading Sapiens. I know that came out 10 years ago, but Sapiens is a good read if you want to understand the history of things prehistory, how we got here and how the market and the state plays such a big role in your lives, whereas in the olden days it was more family and community. Oddly enough, I do get some social media. So I do have Twitter. Twitter is my favourite one. I know even some have used it, like Donald Trump, but you do get good ideas from Twitter. In my world, I'm exposed to a lot of information. So the trick is to try and find ways to screen out the noise and cut through to the valuable stuff. That, I think, is probably the biggest challenge of this age we're now in, because I think for most of us, it could be making us worse investors and worse managers of our lives because we're so bombarded. So you've got to find a way to cut through.
So just a quick survey to see if there are any burning questions that people would like to ask. Yes. You want to finish up with this one? Yeah. So the question is a view on cryptocurrencies and from a Gen Z perspective.
Look, I'm a bit sceptical because I sort of look at things because it's a potential that something you can put your money into. So what is it? Is Bitcoin going to become a currency, a digital cash? And I don't think it will. I have digital cash on my phone, in my credit cards. I increasingly just use the phone. The cost to me of actually doing so is next to nothing if I particularly allow for the points. So there's a fee on the card, which is on the phone, and then the points, they offset each other, and I put so much on the card. I always pay it by the due date, by the way, always pay by the due date, as in never pay interest. So it's virtually free to me. Bitcoin does have an advantage with international transfers, but I would point out that most people don't do international transfers much. It's day-to-day stuff. The average cost of a Bitcoin transaction at present is $30. The average time to complete is $10. So this will be tap and go in a shop. If Bitcoin was on here, it'd be tap and wait. So it's not practical for actual cash transactions. It's highly volatile. A couple of weeks ago, it was over $60. When I last looked this morning, it got down to $30 and then it was $38. So I'm thinking, no, I'm not, but just pretend I'm thinking of buying a new Tesla. Elon Musk told me he'll accept Bitcoin for it. I put down the deposit. I've got all my money sitting in Bitcoin waiting, and guess what? Well, he did. Forget that bit. But anyway, it's gone from $60, 60,000 to 38 overnight. Its volatility is huge. You can't rely on it. Whereas the $50 sitting in here or the digital cash sitting here, I know roughly what it's going to buy. I mean, there's a bit of inflation in Australia, but it's trivial in the great scheme of things. It's not moving up and down by 80%. So I don't think it's going to be digital cash. Secondly, it's not an investment that I can value with yield or income flow. I can buy a house, I can value it on the sort of rents it might provide. I can buy a share on the profits that it might generate and blah, blah, blah. But there's nothing to justify this thing. So therefore, it's all speculative. It's just a question, if I buy it, can I sell it to you for a bit more down the track? And will more people come in to buy it, which makes me think it's a bit of a Ponzi scheme. And why is it so beholden to some internet guru, to techie guru? What's his name appears on TV on Saturday Night Live, doesn't say anything about Dogecoin, except it's a hustle, and Dogecoin halves in value. I mean, what a joke. That said, I like blockchain. The Reserve Bank and other central banks are looking at digital currencies. I think in Australia they're looking at it from a wholesale point of view, but it's quite conceivable it might go down a retail point of view, doing transactions even cheaper than I can do on my phone using my bank. And therefore, I think there is a future in that. It's just that I don't think it's going to be Bitcoin or Dogecoin, which itself was a joke. Ethereum is probably a slightly better one. And why did what's his name, Elon Musk, only discover that Bitcoin used a lot of energy last week. He put out that comment to buy that he's buying Bitcoin. He had 1.5 billion. He's going to accept it in February. Bitcoin goes from 30,000 to 60,000. But even then, everyone was talking about how much energy it uses because of the mining process, the number of computers you need to mine it. So it's very, very dirty. And then they make up this story, oh, it uses so much energy, that's going to encourage solar. Well, we use up enough energy anyway, so we'll have solar for that. But a lot of the logic around it is just lacking to me. But that doesn't mean it can't go up 100% or down 100%. I'm not saying anything about that, and you're free to speculate on it. It's just that fundamentally I'm a bit of a skeptic.
Reminds me a little bit of how Leland Stanford made his money, which was he'd worked out how he could control the path of railroads through America as they were kind of doing the whole manifest destiny, east to west. But what he'd do is he'd buy land and then he'd announce where the railroad would go. He'd make a lot of money selling the land afterwards. Well, look, I think it falls to me, Shane, just to really thank you for your time coming out back to Macquarie University. I think I can speak on behalf of all of us to say it's just really fascinating to hear your story, to hear the contribution you've made to Australia, to economics, to the profession, and to think about the kinds of questions that so many of our young leaders are thinking about. I think they can take great inspiration from your journey and from your insight. So thank you, and thank you for the newsletters you write and the commentary you give. It's extremely illuminating for the country and the economy we live in. So thank you.